and Karani Securities. Thank you, and over to you, sir.
Yeah, thank you, Melissa. Good evening, everyone. On behalf of B&K Securities, I would like to welcome all of you for the fourth quarter FY22 results of Vardhman Textiles Ltd. Today we have with us senior management of the company, including Mr. Neeraj Jain, Joint MD, Mr. Sushil Jham, Director for Raw Materials, Mr. Bukesh Bansal, EVP for Fabric Marketing, and Mr. Rajiv Thapar, who is the CFO. And I would now like to hand over the call to Mr. Jain for opening comments. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. I'm sure the result would have been seen by all of you.
Excuse me, management. I'm extremely sorry to interrupt, but the audio is not clear from your line, sir. If you could just speak a little louder.
Okay. Am I audible now?
Yes, please go ahead.
Okay, thank you. So good afternoon, everyone. I'm sure the result would have been seen by all of you. So as expected, the fourth quarter numbers were still okay, since the market at that stage was stable. The prices of cotton were still not very high till the fourth quarter. And in line, the results are in line with the working which was happening in that period. So there's been one or two major expenditure which has been put in this period. So one is a hedging loss of about 60 crores. When we were buying cotton at the starting of the season, we felt the prices are too high because it was the start of a new season, and we were covering the cotton physically. So we tried to hedge it over New York future by selling the New York future, so that in case the prices come down, at least to that extent there could be an advantage, there could be a hedging. But unfortunately, the market was going in a different way, both internationally and domestic. As a result of that, there was a mark-to-market loss of about 60 crore in this result, and so which is where claim has been provided on 31st March. Other than that, I think all numbers are normal in my view, and there's no deviation of operation in this period. And by and large, all operating parameters are controlled. All our productions were running smoothly, both on the yarn side as well as fabric side. Having said that, I think there's been this concern that what is happening as of now on the cotton spinning side. The cotton prices continue to increase in this period, and we saw one of the highest ever prices in the history of cotton, whereas the existing prices are close to about 100,000 rupees per candy, which was last year about 47,000 rupees a candy. The international prices also from 70-75 cents last year, today is moving in the range of about 145 cents per pound. And of course, the prices have increased or have doubled in the international market also. But the domestic prices are, the increase is a little higher compared to even the international increase, because which was estimated earlier in the range of about 350 to 360 lakh bales, is now revised. Estimates are coming between 315 to 324 lakh bales as of now. So that's one of the reasons where the crop was a little low because of the weather condition. And also in this period, since there was an import duty, so the viability or the cost of importing was much higher. So mills could not take a decision at that stage because of the cost factor to import cotton. Government relaxed its duty up to 30th of September, but somehow by the time this relaxation was given, by that time there was hardly any crop available outside, and as a result of that, so even it is allowed to import duty free as of now, but I think it's going to be limitation how much quantity can be imported in this period. So the sector has again spoken to the government, requested them to relook at. The government is looking at a possibility to allow the duty-free shipments up to 30th September. So rather than the arrivals in India, they are looking at a possibility, if the government allows that the shipment, if it is made by 30th September, could be allowed in India on a duty-free basis. So that's on the raw cotton side. but at the same time, the overall crop seems to be the next year perspective looks good because the area is increasing practically everywhere, and including India, and there could be a possibility the next crop could be quite good if monsoon and things goes well, which as of now are okay.
Sir, this is the operator. I'm really sorry to interrupt once again. The audio is dipping from your line, sir. Participants are not able to hear you.
Hello?
Yes, sir. If you could be a little louder, sir.
I will try.
Thank you, sir.
So, yeah. So in this period, I think till the next year crop seems to be quite good as of now. The sowing is increasing wherever it has started happening. The monsoon as of now looks to be on time, and there could be a possibility that the next year crop in India as well as in the world market could be good. So there could be a surplus situation next year compared to the situation this year. Since the raw cotton prices were increasing, at the same time there was increase in the yarn prices also, but there was definitely a resistance from the market or from the retailers buy at a very high level prices. As a result of that, the spinning industry came under pressure, and if you go by the marginal cost of raw cotton and the marginal sale of yarn, there is definitely a pressure in terms of the margin. And many products, it could be virtually there could not be, there is the possibility that there is no margin available in a few commodity products as of now. So that's a situation of cotton and cotton yarn as of now. And it looks like since the cotton prices in India are too high, so lots of mills have stopped or have they started reducing their capacities so that they can reduce the consumption of cotton because the new prices are the current prices are too high, and on that there's hardly any margin available. So lots of mills have tried to optimize the operation. Some people have reduced the capacity, some have shifted to the synthetics or 100% poly or viscose, etc. So that they can run the operation at the same time they can reduce the cotton consumption also. So in terms of volumes, we have been running full till now, and also on the fabric side things are better. So since the markets were opening, all school offices were opening, so there was good demand of woven fabric in this period, which was a lull in between for about 1.5 years because of COVID. So the volume in our fabric division also was increasing or was consistent. The margin has started becoming normalized. But I think again, because of the very high prices of raw cotton, since there is a pressure from the retailer or from the final brand to accept this kind of price increase, entire chain is trying to readjust, and the entire chain margins have been eroded as of now. So the same situation is there for the fabric also. Mukesh, can you add something on the fabric side?
Hello, good evening everyone. Thank you, Neeraj. Yes, you rightly said that during the Q4, on the fabric side, the demand was coming back after a lull of about six quarters. So not only the foreign markets, but the Indian market was also rebounding, as after a long time we were seeing when all the markets were open and the consumer was coming to work, coming for tourism. So there was a good demand. Of course, as far as the prices are concerned, the profitability is started coming back to normal now, but at that time, since the cotton and yarn prices were still rising, and there is always a time lag between the yarn price increase and fabric price increase, but nevertheless, people were adjusting to the new prices. The customers were adjusting to the new prices during the Q4. Nothing much to be added, Neeraj.
So I request Mr. Sushil Jhan to add, or if there are, or we can start with the questions. So first we can take up on the raw cotton. Mr. Jhan, who is our Director Raw Material, is also available. So accordingly we can take the question on.
Good afternoon, everyone. Yeah, we can start with question answers.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Vishal Mehta, an investor. Please go ahead.
Sorry, I just wanted to tell you that the line was disturbing, so I was not able to hear. Sorry.
Thank you. We'll move to the next question from the line of Bharat Choda from ICICI Securities. Please go ahead.
Yeah, sir. Thanks for the opportunity. Basically, I just wanted to understand, because I've been reading reports in media that there are chances that or there are suggestions that probably yarn exports should be banned. Do you think such a thing is possible, or what is your take on that, and how that, if that is like any move like that would impact us?
It's ultimately the judgment of government what they intend to, what they want to do. But as of now, the exports have already come down because the prices are so high that customer outside is not willing to pay those kind of prices. And we understand as of now the production cuts have already happened by the spinning mills on the cotton spinning. So if any measure is taken where the exports are reduced or are cut down or are calibrated, probably it will have some impact more on the prices in domestic market, because already the demand is poor. I'll not say the demand is poor. Already prices are so high, that's why the demand is poor. So people are not willing to commit at these prices. But if we want to reduce the exports, then the same material will be available in the domestic market. But because of the price pressure or because of the negative margins, if that happens, people will still not be producing. So I don't think that domestic availability will improve, but by reducing the export. But at the same time, I think there could be more distress which could come to the sector.
So, sir, is it correct to understand that at this level, the margins that we might be making are negative for exports? No, export and domestic prices are same. So the domestic prices as well as the export prices, there's not really any difference. But yes, going by the current cost of cotton, the current cost of cotton and the current yarn prices, there would be, lots of products, the margins would be negative as well on the basic product. Because if you look at the conversion, generally it is 1.3. So if we use that kind of thing, then probably the cotton prices at 330 levels, and then probably if you convert to yarn, that would be 420. But whereas if you look at the prices that we are getting are around 380, 370. So that kind of mathematics doesn't suggest it to be like we would be making money on that. Yeah, that's true. Okay. That's true. And sir, what if you could share a bookkeeping question? Just what was our yarn exports in FY19 as a percentage of total turnover, and what is it currently? So out of the total production, we do almost 35 to 40% is the yarn export, and about 30% we consume for our captive, and another 30% is for the domestic market. So there's not really any major change 2021 versus 21-22.
Of course, 21-22 will be a little lower as a percentage in exports because captive consumption was less and we were exporting more in 2021. But if we look at the pre-pandemic situation, then probably this year is a normalized year and our export percentage would be almost comparable to pre-pandemic period.
Okay. And sir, how are we placed on the cotton inventory? Like, how many months inventory do we have, and at what price? If you could just give a directional idea on that.
Normally, we don't share our inventory at any time, but I think it's up to you to get it from the balance sheet where the numbers would be available. So we don't share that number ever. But
Okay,
yes,
sir.
I can share. This is not like what we normally have as our inventory. So this year we are not covered in our normal course of time.
No, so from here on for orders, we would be buying at current levels. Is it correct?
Yeah, partially current and partially stock.
Okay. Okay, sir, that's it from me. I'll come up with follow-up questions.
Yeah.
Thank you. We have the next question from the line of Abhijit Dey from Equence Wealth Advisors. Please go ahead.
Yeah. Good evening, gentlemen. One question from my side regarding the hedging losses which you mentioned, because cotton prices have continued to move up post 31st of March. So just wanted to know, if you can give in terms of direction whether we will see more hedging losses going forward. I mean, have you continued to hedge cotton even in this current quarter, and what's your strategy going forward?
Yeah, so we still feel the price is on a very high side, so we are not taking any further hedging as of now. So whatever we have done, I think that still continues as of now, and we'll have to decide at some stage when do we wind it up. But as of now, it's continuing.
Okay. So you're not entering into any new hedging contracts. That's what you're saying, right?
As of now, no.
Okay. And secondly, sir, on the capex, the first phase of the expansion, the yarn side is expected to come up by September, and then also post that you have announced a series of capex. So all that is basically on schedule, and is there any change in the timeline?
So the first leg, which was already under implementation, the two projects, one at Bhuvni and second Vortex project at Sastapur, they are on schedule and they are likely to be completed by September, October this year. There's some small delay here and there because of the construction, otherwise, or the supply of machinery. Otherwise, it's on schedule. The new expansion, we are yet to take final. We have applied to the government for their approvals as well as the incentive they give it to us in Madhya Pradesh. We haven't received the approval as yet. But as of now, going by the industry situation also, I think we might take a view maybe after 6 months or so. So as of now, we are not committing any new expenditure as of now.
Okay. So what is the capacity addition which will come up in September, October on the yarn side?
The total spinning and vortex taken together, it will be about 100,000 spindles equivalent.
Okay. Right. Thank you and all the best.
Thank you. We have the next question from the line of Keshav Garg from CCIPL. Please go ahead.
I just wanted to understand your view that, like you mentioned, that you are expecting cotton prices to move down, and at these prices there are no demand and mills are shutting down. So then who is buying this cotton, and why are cotton prices sustaining at these levels? And if cotton prices do come down as you are predicting, then will we face some inventory loss?
So, first of all, the cotton prices have increased in the entire world. So I think it's more than physical demand. There are lots of funds who have taken a position because of, I think, easy money policy. So they have invested into various commodities, including cotton. So that's one of the reasons the prices have been going up. Otherwise, on fundamentals, we don't feel or find any reason why the cotton should be double compared to the last year, when there is not that kind of demand increase happened in the raw cotton prices. The Indian prices in sympathy have increased in India, which is aligned to the world markets. The prices in India are a little higher, the increase is a little higher compared to the world market, only because our crop has come down. The overall crop size is much less compared to what was estimated earlier. Third, since there is a shortage of cotton, especially in India, so that's why people are still buying some quantity. So there are no millers reduced their operation fully. So everyone is trying on 70-80% capacity utilization, which will still. That's why the people are still in a position to sell the cotton. Because, but I think at the same time, going forward, if these prices continue, there could be a possibility of a further drop in the overall spinning activity. Of course, whenever prices come down, we don't know when and how much. Whosoever has the inventory available to them, whatever is the inventory available to them, there will surely be a devaluation loss whenever it comes down. So it depends whether it happens now, it happens in September, October, November, December, it's anyone's guess. So most of the mills are trying to have the minimum inventory as of now, so that whenever the devaluation happens, they should be in a position to reduce the losses, because it's bound to come whenever the devaluation will happen.
So basically, sir, you are not expecting yarn prices to move up significantly, and you are expecting basically cotton prices to go down.
No, yarn prices beyond this increase doesn't look possible for two reasons. One, the prices, if you look at the world prices, so even under today's cotton prices, I think the landed cost of cotton in Vietnam, Vietnam being the largest exporter of yarn, is deciding the prices as of now, because there's a cotton available, and they are in a position to sell yarn at the prices which are prevailing as of now. Indian cotton prices are higher compared to even the imported cotton or including the Australian or the Moth quality, which is far better quality in India. As a result of that, the Indian spinner, there is a more distressed situation as of now compared to someone who is using the cotton, which is much better in quality. So practically the prices are being decided by the normal circumstances where the cotton is available, and those basis the yarn will get adjusted. Since our cost is higher, I think to that extent the Indian spinner will be losing or will have the more pain compared to someone else outside. So we don't think the prices can increase. We don't think the prices can increase from these levels, yarn prices. So it looks like, because already there is a lot of resistance from all the brands to buy these prices. So it looks like whenever the cotton prices get adjusted, probably the margins will restore. Or if the cotton prices further increase, which is anyone's guess, it can happen sometime, then probably the readjustment of the yarn prices can also happen.
Sir, and what would be our capacity utilization in yarn?
As of now, we are running 100% capacity.
Sir, and do we have enough cotton to keep on 100% for at least this quarter, first quarter?
First quarter, yes, we'll have. So plus we are replenishing it also. So we are buying from the market also, and we are importing it also. So I think a mix of cotton available in India with us, fresh buying both internationally and domestically. First quarter should not be an issue at all.
Okay, sir. And sir, lastly, just want to get an idea that, sir, what would be the cost of production of cotton per candy? Broadly?
Cost of cotton.
Because I'm trying to understand that other commodity prices have also gone up. So whether farmers, does it make sense for them to shift to cotton, and so that the supply can increase and prices can go down?
So the farmer is earning much higher than his cost. His cost generally, for example, the MSP last year has been 6,100 rupees normal price. So this year, as of now, the prices are 11,000 rupees. So farmers, he is earning much higher than his cost as of now. So there is lots of incentive for the farmers to go in for the cotton crop increase this year.
Okay, sir. Thank you very much. And best of
Thank you. We have the next question from the line of Hemant Gupta from Navig Data Analytics. Please go ahead.
So good evening, everybody. My question is regarding exports.
I'm sorry to interrupt you, but the audio is not clear from your line.
Are you able to hear me now?
Are you on the handset, sir?
No, I have removed those handsets now. Are you able to hear me now?
Okay, if you could be a little louder, sir.
Okay, that's fine. I'll try. Okay, my question was regarding exports, sir. As I understand, like we are an integrated company in the sense that we are in yarn, fabrics, and then the garments as well. What part of the value chain we actually export the most? That is the first question I had. Secondly, do we intend to focus on exports, especially from value-added segments of the value chain, like maybe garments and all?
So both yarn and fabrics, garment is a very small composition of our overall business, maybe less than 1%, maybe at best 1% or so. So both yarn and fabric, we are exporting almost 40% of our production directly exports.
Okay, thank you.
Thank you. We have the next question from the line of Ankit Madwani from Phase 3. Please go ahead.
Yeah, hi. So just a quick question on the global yarn prices. So I mean the previous high of 2008-2009 was close to about $160, $170. So what's the view that those kind of levels can be seen and obviously converted to Indian, multiplied by the Indian rupee and converted to the Indian price would be much higher. That is one. And the second being that at such high prices, what are the chances of polyester increasing its share in the entire textile value chain vis-a-vis cotton? So thank you.
Yeah, so the previous high 2010 for a small period of time, the cotton touched almost $2 per candy also. So as of now, it's close to about 145, 150 cents as of now. But if you look at the Indian prices, the previous high of Indian cotton price was about 65,000 rupees a candy, which as of now is 100,000 plus rupees per candy. So, I mean, it's anyone's guess if the price continues to go up. Nobody had thought that the prices will go to these levels. So if it continues to go up, it can happen. It's anyone's guess to that extent. So yes, there is lot of substitution happening both with the 100% poly as well as viscose also. So both the fibers are catching up well in the Indian domestic market because of the price range, and spinner wants to utilize the capacity. So I think both the fibers are increasing their share.
Yeah. Can you give some color on the percentage of change that happened in the last 6 months? Maybe small, but just to get a heads up.
I can give you an idea. Estimated that whatever cotton consumption was happening earlier, probably today there would be a drop of at least 25%, and it will have both effects. One, there will be some capacity utilization which would have come down, and maybe partially 5 to 7, 10% would be the substitution which can happen by way of viscose and poly. But as of now, the major is the drop in the overall production.
Great. Thanks.
Do you have any more questions, Mr. Madwani?
No, that's it. Thank you.
Thank you. We have the next question from the line of Apurva Sharma from PGIM. Please go ahead.
Yeah, thank you for the opportunity. I had one question regarding the underlying demand, sir. So I understand the prices of cotton have gone up, and there's a sharp price increase, and of yarn there is a resistance among customers. But the underlying demand for yarns, I mean, given this extra, if you remove this extraordinary situation, how do you see the demand in terms of for an Indian player, given the China plus one and things like that? So if you can just give some sense on that.
The momentum of the demand from India still continues to be good. The China plus one factor, where most of the European or the Western world started looking at, they're still going to go on the same. They still want the India to deliver them both yarn, fabric, or the garment, whatever we can do. So I think on fundamentals, I don't think there is any change happened in last 3 to 4 months time. But since our prices have increased beyond a point, so that's where their resistance is coming to buy at these levels. But in terms of their thought process or fundamentals, I don't think there's any big question mark as of now on that.
Okay, so in short, can we say even only this is just a sort of a temporary setback, sort of due to cotton price increase, And once things move in line, then again, the demand is not a problem. That's what you're saying, right?
Yeah, as of now, doesn't look like. So maybe this issue is more in terms of the availability of cotton. So Indian prices going much higher. I think once these are normalized, probably situation would be normalized.
Okay, and sir, one more related question. You explained very well that why cotton yarn prices might not move further because of the resistance from the buyers. But given that capacity is going down and there is a shortage of yarn and demand overall is decent, don't you think the yarn prices should move up? Because now that there's some announcement from the Southern Mill Association also, so spinning capacity going down and there will be a shortage of yarn in the market. Don't you think the prices should? Your sense, that the yarn prices should go up in line or?
No, it's a question of the viability of operations as of now. So that's why there is a concern on the demand. The moment yarn prices go further up, the margins would start improving. So all the capacity which is shut down today will start operating immediately once again. Since the raw material is not available in sufficient quantities, so it will further increase the prices for raw cotton and the situation will remain same. So unless we have a new crop where the adequate raw materials are available, I think the major change will not happen in the entire value chain for next few months.
Sure. And one last question. Sorry for just one last question. You said you have seen, there have been an increase data. What you are seeing is increase of cotton sowing this season, right? Globally and India. Can you just quantify in terms of percentage what over last year? Just I know it's too early, but what's the general trend you are seeing versus last year? What can be the increase in cotton sowing across? To give a sense.
So, in our view, the bird can increase their quantum by about 8 to 10%, whereas India increase could be 15 to 18% because last year our crop had come down also because of the bad weather. So, right. The area will increase by 8 to 10%. Further, if the yield improves, so Indian growth can be in the range of about 20% as well on the overall crop side.
Sure, and this cotton comes to the market by October, November, right? That's when we start the new cycle.
October it starts coming in, so the full volume will be available November onwards. But October the good quantity will start coming in.
Okay. Till then the situation is the supply situation remains tight. So then there is a so that would be the scenario till in Q2 at least, and then Q3 should be better. Yeah.
Possible.
Yes. Okay. Thank you for the opportunity.
Thank you. We have the next question from the line of Gaurav Jain from ICICI Mutual Fund. Please go ahead.
Yeah. Hi, sir. Thanks for taking my question. Just a small follow-up on that hedging question. So, as compared to where the contracts would have closed on 31st March, I understand we have carried forward those contracts and we have not entered into new contracts. But then, as on date, where would the prices be? If it were to be calculated today, should we be staring at more mark-to-market losses on the contracts we are carrying forward?
Yeah, so the first quarter there will be some amount of further mark-to-market. So what I mentioned earlier that we are not entering into any further new contracts, but yes, whatever is carried on, that's carried on. So first quarter will also or may also have some mark-to-market on that.
And can we quantify it as compared to Q4 as on date? Where would it be? Just to get a sense of the quantum.
No, it will be lower than that, but too early for me to say anything as of now. But the quarter is still on, so we haven't still concluded the position. So yes, as of now, surely will be lower than the first quarter.
Okay. Thank you. Second question, sir, on the capex bit. The earlier thing which I remember, we had guided for 3,000 crore capex over the next 3 years. And we were to add spindlage capacity in 3 parts. So first 1 lakh spindle I understand is coming in October 23 as per schedule. Can you help us understand the other 2? There was one addition of 1.65 and 170,000.
So the first 100,000 is October 22.
Yeah, October 22. Sorry, yeah, I missed it. Yeah, October 22. And
remaining, we haven't started to work on this. As I mentioned earlier, we have only applied to the government for their approvals and incentive schemes, etc., etc. But considering the overall situation of the industry, we have held it on for a few months, and maybe we'll take a view only after a couple of months. Because in any case, the cost of machine or the availability was also a concern. So since the situation of the business was not very good, so we thought it better to wait for 3 to 6 months time before we start committing money into this. But to me personally, looks like it will eventually come. But there could be maybe 3 to 6 months we want to wait and let the situation normalize for the business.
Right. So at this point in time, will we be able to have a capex guidance for FY23-24? No, right?
As of now, no. Maybe after the second quarter will be more clear on it.
Yeah, makes sense. Sir, will you be able to help us with the gross and net debt number as on March 22?
I'll ask CFO to reply this question.
Okay.
So gross debt, both on long term and short term, it is close to 2,000 crores of rupees.
Sir, this is the operator. I'm sorry to interrupt. We cannot hear the current speaker.
Yeah. Is it clear now?
Yes, sir. Please go ahead. Thank you.
So gross debt, both including long term and short term, is close to 2,000 crores of rupees as of March 22.
And sir, net debt?
Sorry? Net debt. We are having an investment of about 1,500 crores on our books, so net is about 500 crores.
Okay. Okay, thank you, sir. That's it from my side.
Thank you. We have the next question from the line of Sonal Gupta from L&T Mutual Fund. Please go ahead.
Good afternoon, sir, and thanks for taking my question. Just wanted to understand, have you quantified? Sorry, I missed, I think, some part of the initial remarks. So, have you quantified the Q4 hedging losses?
Q4 already is announced in the balance sheet.
I mean, in terms of P&L impact, is there anything that is there?
So 60 crore is already quantified and recorded in the books of accounts.
Got it, sir. Thank you for repeating that. And just, what is your sense in terms of the demand side? Because, some of the US large retailers have, said that, they are seeing a slowdown in discretionary consumption and inventory levels are high in the chain, it seems. What is the visibility that you have that while you indicated that you can run at 100% capacity in Q1, how do you think about your utilization levels going through the year? Is there a risk that we see demand also slowing down from second quarter onwards?
So there are two factors where this demand is coming under question mark. One is the high prices of cotton, which is converting into high prices of yarn, high prices of garment, where the demand is coming down. Also, as you mentioned, probably it's a one fact that because of the Russian-Ukraine war, all the prices have gone up, especially the fuel prices, etc., etc. So I think there is some concern to the people on overall consumption because of that also. And third is the supply chain has started improving now. So earlier people were ordering more because the supply chain was taking lots of time. And as things will be improving, probably people will like to order less so that whatever extra inventory they had or extra buying they have done, that can be readjusted in next 6 months' time or so. So considering this fuel prices, etc., there could be possibility that there's some demand may come down because of that. And two, elasticity of demand, prices are too high, so there could be a possibility for some drop in the consumption there also.
Got it, sir. So, I'm just trying to understand, do we have visibility into Q2 orders or Q2 production, or will that only happen later?
Normally, the yarn is sold for about 50-60 days only at any stage. So, as of now, we have the visibility to that extent, our normal number of days. But going forward, I think only the time can tell.
Got it, sir. And last question, I don't know. I mean, could you sort of indicate, I mean, directionally, you would have seen a compression in your margins on the yarn side? I mean, other than the hedging loss that you've incurred?
Yeah, surely the margins are much less compared to what it was last year.
Okay. No, so not margin. What I would say is that, I mean, like on a absolute basis, would your margins from Q3 to Q4 per kg would have dropped?
No, so normally let's say one is the way of calculating margin. Second is whatever the clean cost. Generally, the spinner is getting about $1 to $1.20, 30 cents as the markup over the cotton, which as of now will be in the range of maybe 80-90 cents as of.
Got it, sir. Got it. Great.
Conversion cost. I'm not talking of margin. I'm talking of the conversion available over and above the raw material cost.
Got it, sir. Yeah, that's what I was trying to understand. Great, sir. Thank you so much.
Thank you. We have the next question from the line of Himadi Upadhyay from O3 Capital. Please go ahead.
Yeah, hi. Good afternoon. I had a question. See, what we are hearing is even large brands want to have more cotton and acrylic mix and various other mixtures, okay, in the textile because of the increased cotton prices. What impact does it have on our business, and are we also seeing increased penetration or let's say what was 100% cotton moving to 90% cotton and 10% something else? And does it really make a dent or changes our spreads in yarn manufacturing? So this was the first question.
Yeah, so it is true that lots of brands are looking at to reduce their cotton, cost. They want to move from 100% cotton to the blends, especially polyester and viscose. So we are really finding those kind of trends in the market, and but it doesn't make much of difference to us because for us, whether we are producing 100% cotton or we are producing all these blends, so on the spinning side, it doesn't make really much of a difference to us. So we are finding those changes, and to that extent, we are converting our internal capacities also on those products, and we keep on evaluating it with 100% cotton yarn, and whenever we find or we feel the margin is better in a different product, we can easily shift our capacity on that product.
Okay, and are the margins significantly different between let's say a cotton yarn, 100% cotton yarn, or a 60-40 cotton acrylic or something like that, or a polyester or whatever, or the margins are generally similar because all
the margins are generally similar, but as of now, since the cotton prices are too high, so I say the margin or the loss on the blended products would be lower compared to 100% cotton for the basic products.
Can you repeat? I could not understand the point.
Generally, the margins are comparable, but as of now, since the raw cotton prices are too high, and on basic products, on the marginal cost of raw material, marginal cost of yarn selling, there is a loss, which in case of blended yarn is lower loss as of now because over there you are using a part of synthetic fiber, which is a much less cost compared to the cotton.
Okay. So, numerically, I am not talking in terms of percentages, but numerically the loss would be lower and even the, let's say, a profit may be higher in mixtures.
No, whenever the industry is normal, at that stage, polyester cotton, viscose cotton or 100% cotton will give you a comparable margin. So, this situation is there as of now, but as soon as the raw material is normalized, the margins will become normalized because otherwise it's a spinner's choice. Wherever he finds a better product, better margin, he'll keep on shifting his capacities on that. So this is a very, very unique or a different position, which is why this differentiation would be coming in. Otherwise, whenever the raw material becomes normal, I think the margins generally would be comparable.
Okay. And how difficult is it to turn from 100 pure cotton to, let's say, mixtures? Does it take a lot of time or it's not a very long procedure.
Some changes are required in your machinery parts as well as your layouts, but that's not very difficult to do.
Okay. And secondly, let's say if the price of cotton normalizes, okay, in this financial year, but are we seeing the spinning capacity will also increase dramatically over next 1 year or 18 months? What is your view? And not just in India, but let's say Bangladesh and Vietnam and all those places, where are we seeing significant capacity coming for the spinning?
I think considering the situation as of now, everyone wants to wait and hold for the situation for some time. I don't think the next 12 to 15 months there's likely to be any huge capacity addition likely to happen into the system. But yes, if the margin continues to be good, or if the business continues to be good, and people and the brands keep on looking at China plus one, there could be capacity which could be added into Vietnam, India, Bangladesh, maybe Indonesia, etc., because China in any case will be coming down. So I think next 12 to 15 months, I don't think there's likely to be any major addition which can happen considering the today's situation. But yes, whosoever project was started earlier, they will like to complete that. But I think everyone is trying to hold on to the new capacity expansions as of now.
Okay. And one more thing, you stated one thing that people who work with imported cotton, their profitability won't get that much impacted versus people who use domestic cotton 100%. Means, did I get it right, or what was the meaning of that statement? Something similar to that.
My meaning was there are two biggest countries which are exporting yarn, India and Vietnam. Vietnam doesn't have their local cotton, so they are importing cotton. And whatever is their landed cost of cotton, based upon that, they will determine the price of yarn. Whereas the Indian cotton is today even expensive than the imported cotton.
Okay.
Because of the time. Because even if you want to import the cotton, there's going to be 2 months, 3 months, and by that time you will have to use the Indian cotton. The window available for the duty-free import of cotton today is 30th September landed in India. And the crops available are only Brazil as well as Australia in this period, where the shipment time is not less than 1.5 months or so. So there is hardly any shipments available for the month of June and July. So I think the likelihood of India to import big quantities in this period with a risk that if instead of 30th September cotton which is on 1st of October you have to pay 11% duty, people will not take that kind of a risk. So that's why people are not committing big imports into India, and that's why the prices in India are not coming down.
Okay. And you generally import some weight of cotton, means Egyptian and some of those. So how are we placed in the market for imported goods?
Those are specialized cotton, Supima, Egyptian. There is no comparison with the Indian cotton. So those are specialized cotton. Customer will pay the price if they want to use the yarn or the fabric or a garment made out of those cotton. So there's no issue to that extent. Issue is the normal cotton which is comparable or replaceable with the Indian cotton, the normal imported cotton. That's where this issue is coming in.
And how much of our revenues would be from that imported cotton, because the realization would be also higher? Because we see raw material of it is...
Normally, we consume almost 90-93% cotton is the Indian cotton.
Okay, so 7 to 8% is imported. Okay.
Yeah, 5 to 8% is imported.
Okay. Yeah, thank you from my side.
Thank you. We have the next question from the line of Marshall Lewis from Swastika Investment. Please go ahead. Mr. Marshall Lewis, please proceed with your question. Your line has been unmuted. As there's no response from this line, we will move to the next question. The next question is from the line of Nikhil Agrawal from BT Capital. Please go ahead.
Good evening, sir, and thank you for the opportunity. So I just wanted to understand,
for your production in quarter 4, what percentage of the raw material of cotton that was used in quarter 4 was procured in the previous quarter? Because there's been a significant rise in prices in quarter 4. So I just wanted to understand what percentage of cotton was procured in the previous quarter, which you've used for production in quarter 4. If you can highlight on that.
It's an ongoing purchase because the new season starts only in the month of November. So it's an online purchase which we will keep on buying on a daily basis and consuming it. So it's not that we had a huge stocks which were available to us till 31st December. No.
Okay. And sorry. Hello.
Yeah.
Yeah. And so, earlier you have maintained that your cotton procurement season is always between October to March because of the prices and the quality of cotton that you get. But just previously you mentioned that you are still procuring cotton. Any reason behind that? Because cotton prices are already on an upward trend. So will that have any impact on your margins or as such?
Of course, it has an negative impact on the margins because the prices were too high and we never wanted to have a huge amount of stock because if the devaluation happen, it will happen in a big way. So the crop was not available. Even if we wanted to buy, we could not buy because the material was not available in the system at all. So we are still buying to that extent.
Okay. So will you be continuing to buy for the remainder of the season as well?
Yeah.
Okay. And so regarding this, yesterday there was this notification from South India Spinners Association. It was mentioning that they will stop procuring cotton and they will be closing out all the mills. So any impact of this on your business? I mean, I believe it should be positive for you because the availability of yarn will go down in the country. So any other impact on this business of this on your business?
No, not really.
Okay. And sorry.
Other than what you have mentioned, nothing more at all.
Okay. And so just one last question. Any value growth guidance, revenue growth guidance?
It's too early to give any guidance as of now because I think it's an extraordinary situation. Everyone understands that nobody could have envisaged this kind of situation. So maybe the kind of prices, I think there's no point in giving any guidance on the numbers as of now when the things are so different. So I think it's only maybe after the first quarter numbers we should be more clear on how the year looks like.
Okay, perfect. And so you maintain your margins at 18 to 22%, your margin guidance at 18 to 22% even now?
Yeah, that's on a normal year basis, but I don't think this is a normal year.
Okay, Tom. That's it from my side. Thank you, sir.
Thank you. We have the next question from the line of Vishal Bagadia from Roha Asset Managers. Please go ahead.
Thank you, sir, for the opportunity. So if you could share the average realization for yarn and fabric for 4Q as well as FY22.
I can only say for the industry's purpose, we don't share our own realization. The industry, I think the average realization in this period would be in the range of about maybe $4.50 or so.
Okay, sir. And if you could share what is our average cotton price for the year?
For this year?
Sorry, sir?
For the year?
Yeah, for the year FY22, the average cotton price for us.
No, for us, we don't share our own cotton prices. I think once you get the balance sheet, you can calculate it yourself.
Okay, sir. That would be all from my side. Thank you.
Thank you. We have the next question from the line of Pulkit Singhal.
The person you are speaking with has put your call on hold. Please stay on the line. आप जिस
I have muted the line causing the disturbance, sir. The next one is from the line of Pulkit Singhal from Dalmus Capital Management. Please go ahead.
Yeah, hello. Thank you for the opportunity. Couple of questions. First, I just wanted to be clear on the previous statement. Are we saying that at the current cotton and yarn prices, if we were to do business, EBITDA margins would be negative?
Negative or minuscule, I'll say.
Okay. So in that case, how long can the procurers continue to hold out? I mean, ultimately, there can be some inventory correction in the global system for 2 or 3 months, but they will have to start buying as well, right? Their garments have to be still produced and sold. So is this a very temporary thing they can hold out for, or that can be much longer in your experience?
No. They can't really hold on to beyond a point. They will have to procure in any case. So everyone is feeling these are too high prices. So everyone is looking at and delaying their postponing their decision to buy, so that if there is any correction happens on the raw material prices. But beyond a point, they'll not have the opportunity. Everyone will have to buy. Maybe they don't buy 100%, they buy 75%, 80%. That's the customer's choice. But it is not possible that the customer will not be buying at all. So since the prices are too high, everyone is looking and trying to postpone the decision, whatever they can do, depending upon their inventory situation as of now.
Okay. And what happens in the scenario in case prices remain high and then, they kind of crash down? I suppose cotton prices crash, at some point, because you said that there were traders in the system who might have, kind of taken advantage of the situation, and that's pushing up prices. If cotton prices crash and there's inventory loss in the system, do we see a lot more spinners go out of the market, or how does it really play out? Looking at the past cycles.
There is one good thing happened, right or wrong, in this period, since the cotton was not available. So really spinners will not have huge inventories available to them. So most of the spinners will have an inventory anything between 2 to 3 months time against the normal inventory of about 6 months, 8 months kind of a situation. So even if the correction happens and the devaluation happens, I think to that extent the losses will be lesser compared to with the normal inventory if spinners are carrying. Since the raw material was not available, nobody could buy, so everyone has a much lesser inventory in the system.
Okay. And if prices were to remain high, and ultimately, obviously, the buyer also has to pay up higher for yarn, do the margins of 18 to 22% or whatever you've done in the past, does it come back to that level, or you settle at somewhere lower levels?
So ultimately, if the prices are passed on and the buyer is willing to buy, then I'm sure the margins should become normal. But it's a situation where suddenly raw material prices have increased more than the yarn price increase, so that's why there is a distortion. So I'm sure either the customer will start accepting those prices, or the raw cotton or the raw material prices will come down. Either of the two. But whether it happens in 2 months, 3 months, or 4 months, or 6 months, it's a time which will tell. So as of now, the separation is surely there. But I'm sure either way, whether the raw material comes down or the yarn starts getting acceptance at a higher level, then the margin should become normalized.
Right. So lastly, I think there are a lot more garmenting capacities coming up, say, in India and Bangladesh, which I thought benefits spinners in India in some form. Does that continue to take place as a structural advantage for Indian spinners, or does that aspect come down?
No, that should continue to go, because as we are still feeling the Western world's thought process on China plus one continues. So to that extent, I don't think there is any fundamental change in their thought process. So in the medium term, it should again be available to us whenever the situation is normal. So today's situation is different because of our raw cotton prices, which are much higher, both because of the lesser crop and no import could be done because of the import duties. So these are the two biggest reasons why we are more costlier than the world today. Otherwise, everyone in the system, entire world is almost suffering on the same phenomena. So for any product, if the entire world is suffering, that can't really carry on for a very long period of time.
Understood. All right, sir. Thank you, and all the best.
Thank you. We have the next question from the line of Sandeep Bed, an investor. Please go ahead.
Good evening, sir. Just wanted to know, when did the official season get over for cotton this year? Was it sometime in the mid-April or end April?
Sorry, official?
Season for cotton, when did it get over? Normally it gets over by March end or mid-April, right?
No, there's no official date. So our cotton season, typically all balance sheets we top on India is from 1st October to 30th September. Most of the time by 31st March or by 30th April, we get almost 90% cotton is available in the system for the season.
Right.
And I think even today also situation is almost like this, 85% crop is already come.
Okay. So you mentioned that you continue to purchase cotton even today, but by when did you finish most of your purchases? Was it by March end or was it by April end?
Normally we finish by 30th April.
Sorry?
Normally we finish by 30th April.
30th April. And this year would have been similar?
No. This year I've already mentioned we are still buying. We have inventory, we are importing, we are buying also. So it's a mixture of all these three things happening even today.
Okay. So as per your balance sheet, your inventory is about 2,900 crore as of March 31st. And last year it was about 2,800 crores. Of course, this year the prices are much higher, and therefore in terms of volume, the inventory will be lower as compared to last year. So last year your inventory lasted till end October, mid-November, so about say 7.5 months. And given that this year inventory is about 100 crores higher as of March 31st, but the prices also are higher, would it be fair to assume that the current inventory will last till say August or so?
Up to you to decide and calculate. Your number calculations are better than us, so I don't want to give any number and guidance. But yes, the inventory which you are mentioning, 2,900 crore, that includes the finished goods also. And since the raw cotton prices are higher, everything in the system gets valued based upon the consumption date. So even the finished goods inventory, though in terms of number of days could be same, but in terms of value will be much higher since your raw material consumption will be higher. So yes, there would be definitely from the last year we are much less in terms of cotton available.
Right. And today, how much would be the difference between international prices and domestic prices for cotton?
So the international prices are today ranging between New York future is in the range of about 140 to 145 cents US cents per pound. We had another 20 basis points for the imports to happen. So that's about 165 US cents available in India. Whereas Indian cost will be close to about 170 cents, 167 to 170 cents. That's one. But at the same, normally Indian cotton is at a discount from the US cotton because of the quality and the contamination. So we are generally 8 to 10 cents lower than the US cotton. So this time we will be either equal or maybe 2, 3, 4 cents higher than the US cotton.
Understood, sir.
And third, the quality of Indian cotton is very poor this year. So the realization of the yields will also be coming down as the overall quality is not good at all this year.
Okay. And,
so that's where the cost is high.
Right. On fabric, would you say that the margins are now at the normal level?
Sorry?
On fabric business, would you say that the margins are now at the normal level?
Fabric business, our margins have come down, to the normal levels. But again, since the yarn prices kept on increasing and there is a resistance from the end buyer to accept those prices, so there is a pressure on the fabric side also. So the entire chain. So on one hand, the farmer got lots of money available to them, so they have made money. And after that, the entire chain is trying to readjust. So the spinning, knitting, weaving, or garmenting, everyone margins to that extent have come down because there is a final pressure from the retail to accept those margins. So fabric also, as of now, our margins are under pressure only because the yarn keeps on increasing and it's very difficult for us to pass on those prices to the final customer.
Right. Would it be fair to assume that say when the yarn prices comes down, the fabric prices normally doesn't come down correspondingly, and that margins are more sticky in the fabric business?
historically this has been the trend, and let's see how this year goes. But yes, historically this is the trend.
And lastly, sir, you mentioned that the norm.
This is the operator. I'm sorry to interrupt, but we have participants in the queue.
That's last question, ma'am. So sorry, I was asking that at what cotton yarn spread and given say normal fabric margin, would you say that 18% to 22% of your overall margins are sustainable? At what yarn cotton spread? Would it be $1?
$1, 10 cents to 15 cents. I think 18 to 22 will become workable.
Understood. Thank you, sir.
Thank you. Ladies and gentlemen, due to time constraints, we will take one last question from the line of Prerna Jhunjhunwala from Elara Capital. Please go ahead.
Thank you for the opportunity. Just wanted to understand how much has the fabric prices increased in the last 5 to 6 months versus the yarn price increase?
Okay, can you please reply?
Yeah. I would say in the last 5 to 6 months, whatever yarn prices have increased, about 70-80% of that has been absorbed in the fabric prices also.
Okay. And are we having any price increases, experiencing any price increases in the last 1 or 2 months, given that yarn prices are not increasing materially?
Yes. Once the yarn prices stabilize, that when I'm giving a range of 70 to 80%, that range keeps on increasing. So from 80% it will move up to 90% and so on. So eventually, if the yarn price is stabilized, maybe another 1 month or so, 100% of the yarn price will get absorbed in the fabric price.
Okay. And sir, any impact on our capacity utilization due to this resistance of buying from the domestic and international prices, international customers? And where do we expect our utilizations for the first half?
For the first half, it may be difficult to comment at the moment, but for last 3-4 weeks, we have some capacity utilization issues that we are running at about 90%, 85 to 90%. But we expect that it start improving in another 2 weeks or so, because the demand cannot be permanently subdued. It is bound to come back. So if in second quarter it rebounds and we are again back to 95 to 100%, then for first half you can assume a capacity utilization of about 90% or so, 95%.
Okay. And so in the fabric business also, are we looking forward to you see a mix of cotton and other fiber fabrics, or we'll restrict ourselves to only cotton?
No, that's true. We are there to cater to the customer demand. There is inertia because the customer doesn't take a knee-jerk reaction on a shorter period of time, because changing the product mix and taking the product to the consumer, convincing the consumer of a new product range itself, that is a big risk for the retailer. So for a shorter period of time, they may try to stick to the original product range, even though at lower prices. But yes, some change has started happening from 100% cotton to cotton poly, which is cotton, predominantly cotton, and then some portion of polyester, and also from 100% cotton to cotton viscose.
Are we doing how much of percentage of our revenue would be capacity would shift to that side as per your rough estimates, not holding to on that?
Mm-hmm. So at present also our 20-25% of capacity is on the blends.
Okay. Thank you so much, sir, and all the best.
Yeah, thank you.
Thank you. Ladies and gentlemen, that was the last question. I would now like to hand the floor back to Mr. Jain for closing comments. Please go ahead.
Yeah. So thank you very much. And as we are discussing, it's a very, very challenging situation for the industry. But I'm sure this challenge has some medium-term impact or advantages also, though there could be short-term concern. that the mindless expansions which people start looking at may be reduced to some extent, and people will start looking at more economic decision rather than feeling, oh, it's only a north or a one-way traffic for the profitability. Having said that, of course, there are challenges, issues, but I'm sure internally we are looking at it very seriously on a daily basis, hourly basis. What could be the changes which are required in our system, and how can we continue to operate better even in these crises also. So whatever is controllable, I'm sure we have day out, and I'm sure the results would also be good to that extent. Whatever changes we have to make, I think the crisis times gives us an opportunity also to make changes which in general times sometimes it's difficult to carry on. So I'm sure by the time we'll be maybe next couple of months, this challenge continues to be there, but I think the year as a whole still will be better than the situation today. And I thank every investor who have participated in this call and who have always been supporting the company. And I'm sure we'll pass through this time also with comfortably. Since in terms of liquidity, cash availability, I think the company is sitting very comfortably. And we're still looking at our modernizations, other things. So on the long-term projects, the long-term thought process, there is no compromise to that extent in spite of this situation, which I'm sure will give us an advantage whenever these things become normal. So thank you very much. Have a good day. Bye.
Thank you, gentlemen of the management. Ladies and gentlemen, on behalf of Batliwala and Karani Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.